If I was to be asked how is 2022 going to be different, I would say it certainly is going to have a lot more traction on technology spend by banks, and no prizes for guessing that. But if we were to actually make that a little more zoomed in, I would pick three areas that one would see or one would expect to see a lot of traction, right? Not just in banking, but let's say in the financial services space overall. The first is certainly going to be on digital payments. We'll talk about that. But just to complete the perspective on the three areas: digital payments, digital lending, and digital banking in itself. If I was to go into digital payments, now the one thing that we all are seeing, and it's evident to us already, is the next gen instant payments is in the vogue, and we will see this to actually move up. Estimates peg it at about at least 25% of the non-cash transactions are likely to be from e-money. What one is expecting to see bring a lot more traction into this space is going to be cross-border payments, particularly driven by big techs, and also driving a lot of what we would call as B2B payments, right, with coming from big tech. So a combination of B2B and cross-border is going to make a big impact in the payment space, and therefore there is obviously a lot of dependency in driving, let's say, APIs around it, and associated impact is going to be also on cyber security, but that's, those are the let's say downstream impacts there. But in essence, if I was to move to the digital lending space, and in the confluence of payments and lending is areas such as BNPL, buy now, pay later, which we are going to see, having much more traction. We already have, in UK, for example, 4 out of every £100 spent on consumer goods is supposedly on BNPL, right? And we are expecting to see this alternative lending, as they call it, which is technology driven, will see a serious impact. Again, $300 to $340 billion is what is expected to be lent through this tech-driven alternative lending. We will also be seeing a lot of AI, ML enabled, applications evolving in this space, which is obviously the engine behind the digital lending space. If I move ahead to the digital banking space, this is again not new. We have been talking about it for a while, and we are seeing this happen far more than before. One would certainly be expecting to see more of digital-only banks between both neo and challenger banks, and we also are getting to experience more of fintech accelerators. But what this implies to the industry is that we will be seeing a significant investment by banks in the area of open banking and API banking, right? I mean, the estimates are about 25% more banks done something about API banking and building APIs already, and the estimates are at least another 25% more banks are likely to in the next year, which is giving an indication of where the emphasis is going to be and where the tech spend is also going to be. Again, talking about digital banking, one does see the consequence of driving a lot on the digital front is banks validating their operational resilience. We do have Basel norms coming up here, and the resilience angle and actually having your operational framework in place will obviously take a lot more emphasis. We do see the context of ESG becoming far more critical, and there is much higher impetus, awareness, consciousness around environment and sustainability. So one would see that actually having an impact as well. So I mean, if I was to summarize what 2022 is going to be for you and me, besides the fact that one is going to see a lot of digital banking, digital only banking, digital payments and digital lending and everything digital, what that means to you and me is that we should embrace more and more of self-service banking. These are days of buffets, and these are days of getting your own plate and getting it to be it in experiencing banking from your living room or from quote unquote wherever you are. The reality is it's going to be more of self-service banking. So 2022, welcome to self-service banking.